Hey folks, let me tell you something that's going to make you angry. There's a tax on your Social Security benefits that most people don't even know exists until it's too late. And I'm not talking about income tax. I'm talking about something called the Windfall Elimination Provision, or WEP. And if you worked for a government job, a school district, or any employer that didn't take Social Security taxes out of your paycheck, this thing might be cutting your benefits by hundreds of dollars every single month. And nobody told you. Now, I've been helping people navigate this system for over 30 years. And let me tell you, this is one of the most frustrating rules I've ever seen. It catches good, hard-working people completely by surprise. You work your whole life, you pay into Social Security at other jobs, and then when you finally retire, the government says, "Oh, by the way, we're reducing your check." It's infuriating. So here's what we're going to cover today. First, I'm going to explain exactly what the windfall elimination provision is and who it affects. Then I'm going to show you how much money we're talking about here, because it's not small. After that, I'll walk you through why this matters so much and what happens if you don't plan for it. And finally, I'm going to give you some real practical steps you can take right now to protect yourself or minimize the damage. Plus, I'm going to show you something critical that everybody needs to do after tax season that could cost you hundreds of dollars a month if you don't do it. All right, so what is the WEP? Let's break this down nice and simple. The windfall elimination provision is a rule that reduces your Social Security retirement benefit if you also receive a pension from a job where you didn't pay Social Security taxes. Now, let me say that again because it's important. If you worked for an employer who didn't take Social Security taxes out of your paycheck, like a state government, a local school district, or certain federal jobs before 1984, and you're getting a pension from that work, the WEP can reduce your Social Security benefit from other jobs where you did pay in. The government calls this a windfall elimination because they think you're getting too much money. They think you're double dipping. But here's the thing, you're not double dipping. You earned both of those benefits fair and square. You worked multiple jobs over your lifetime. You paid your FICA tax, that 6.2% that came out of your check, and your employer paid the other 6.2%. But the Social Security Administration doesn't see it that way. Now, how much are we talking about here? As of 2024, the maximum WEP reduction is about $587 per month. That's over $7,000 a year. Now, not everyone gets hit with the maximum reduction. It depends on how many years you worked in jobs where you did pay Social Security taxes. If you have 30 years or more of what they call substantial earnings under Social Security, the WEP doesn't apply to you at all. But if you have less than 30 years, you're going to see a reduction. And if you have 20 years or less, you could be looking at that maximum hit. Let me give you a real example here. Say you worked as a teacher in a state with its own pension system for 25 years. You didn't pay into Social Security during that time. But before you became a teacher, maybe you worked in the private sector for 15 years, and you did pay into Social Security then. When you retire, you're going to get your teacher's pension. That's fine. But when you apply for Social Security based on those 15 years in the private sector, the WEP is going to reduce that Social Security check significantly, maybe by $300, $400, even $500 a month. And here's what makes it worse. A lot of people don't find out about this until they actually apply for benefits. They've been planning their retirement based on the estimate they got from the Social Security Administration, and then boom, The actual check is way less than they expected. I've seen people who were counting on that money to pay their mortgage or their medical bills, and suddenly they're short every single month. And you know what else? Your Medicare Part B premium comes right out of that Social Security check, too. So if you're already getting hit by the WEP and then Medicare goes up, like it did from $185 in 2025 to $203 in 2026, you're getting squeezed from both sides. So why does this matter so much? Well, first of all, we're talking about your financial security in retirement. If you're planning on a certain amount of money coming in every month and then you get hundreds of dollars less, that throws everything off. Your budget doesn't work anymore. You might have to dip into savings faster than you planned. You might have to go back to work part-time. It's a real problem. Second, this is a permanent reduction. It's not like they take it away for a year and then give it back. Once the WEP applies to you, it applies for the rest of your life. Every month, for as long as you collect Social Security, you're getting less money than you would have without this rule. And third, a lot of people make decisions about when to claim Social Security without knowing about the WEP. They might delay claiming until 70 to get a bigger benefit, but they don't realize that benefit is still going to be reduced by the WEP. Or they might claim early at 62 thinking they'll get a certain amount, and then they're shocked when it's way less. These are permanent decisions that affect the rest of your retirement. And if you don't know about the WEP, you can't make an informed choice. Now, what goes wrong if you ignore this? Well, like I said, the biggest problem is that you end up with less money than you expected. But there's more to it than that. If you don't plan for the WEP, you might take on debt thinking you'll be able to pay it off with your Social Security. You might help your kids or grandkids financially in ways you can't actually afford. You might delay saving or investing because you think Social Security is going to cover more of your expenses than it actually will. I've seen people who had to sell their homes because they couldn't afford the payments on their reduced Social Security check. I've seen people who had to move in with family members. It's heartbreaking. And it's all because nobody explained this rule to them ahead of time. And here's something else that's going to frustrate you. While we're all dealing with these reductions and complications, you know what hasn't changed since 1984? 40 years. The politicians on both sides, left, right, conservative, liberal, Democrat, Republican, they haven't done anything meaningful to fix Social Security in 40 years. They keep kicking the can down the road. And you know what's coming. In about 86 months, the Social Security Trust Fund is going to run out, and everybody's checks are going to get cut by about 23%. Everybody. It doesn't matter if you're already collecting, about to collect, or years away from collecting. Your check is getting cut unless these folks in Washington do something about it. And don't let them distract you with that nonsense about the stolen Social Security Trust Fund. That's just a trick to get you off the phone. You call up and say, "Hey, what are you doing to protect my Social Security?" And they say, "Oh, I'm looking for the stolen funds." And you say, "Oh, okay, good luck with that." And you hang up. And they're sitting there laughing, saying, "Another sucker that believed it." Don't fall for it. The money's not stolen. It's right there in the trustee's report. Total income for 2024 was about $1.2 trillion. About $1.1 trillion came from FICA taxes. Another $63 billion came from interest on the trust fund. And you know what else? Another $54 billion came from taxation of Social Security benefits. Yeah, that's right. When people pay taxes on their Social Security benefits, that money goes right back into the trust fund. So if you're receiving Social Security, about 10% of your check is actually coming from the trust fund. So next time a politician tells you they're looking for the stolen money, just hold up your check and say, here's 10% of it right here. All right, so what can you do about the WEP? Let me give you some real practical advice here. First, find out if the WEP applies to you. If you ever worked for a government employer or any employer that didn't take Social Security taxes out of your check, and you're going to get a pension from that work, the WEP probably applies. You can call Social Security and ask them directly. Tell them about your work history and ask if the WEP will affect your benefits. Second, get an accurate estimate of what your benefit will actually be after the WEP reduction. Don't just rely on the estimates you see on your Social Security statement, because those don't always account for the UEP. You need to talk to a Social Security representative and get a personalized calculation. Third, if you're still working and you haven't hit 30 years of substantial earnings under Social Security, consider working longer in a job where you do pay Social Security taxes. Every year you add reduces the WEP penalty. If you can get to 30 years, the WEP goes away completely. Now, I know that's not possible for everyone, but if you're close, it might be worth it. Fourth, plan your retirement budget based on the reduced amount, not the full amount. I know it's frustrating, but you need to be realistic. If you're going to get $400 a month less than you thought, you need to account for that in your planning. Maybe that means working a little longer, saving a little more, or cutting some expenses now. And fifth, consider getting help from someone who understands this stuff. A financial advisor or a Social Security expert can look at your specific situation and help you make the best decisions. This is complicated, and there's a lot of money at stake. It's worth getting it right. You become part of our team. So welcome to our team. Look, I know this is frustrating. I know it feels unfair. You worked hard your whole life, you paid your taxes, and now the government is reducing your benefits because you also earned a pension. It doesn't make sense, and honestly, a lot of us in the industry have been fighting to get this rule changed for years. But here's the thing, we can't control what the government does. We can only control how we respond to it. And the best way to respond is to be informed, to plan ahead, and to make smart decisions based on the reality of the situation. So here's what I want you to do. If you think the WEP might affect you, don't wait. Call Social Security today and find out for sure. Get that accurate estimate. Adjust your plans if you need to. Talk to your spouse. Talk to your family. Talk to a professional if it makes sense. And after this tax season, go check your earnings at ssa.gov. Make sure everything's correct. We're all in this together, folks. The system is complicated and sometimes it works against us, but we can navigate it if we stick together and share information. That's what this channel is all about, helping regular people understand these rules and make better decisions. If this video helped you, do me a favor and share it with someone who might need to hear it. A lot of teachers, police officers, firefighters, and government workers get hit by the WEP, and they have no idea it's coming. And everybody needs to know about checking their Social Security earnings every year. Let's help each other out. Thanks for watching, and I'll see you in the next one.